Hello, welcome to European Open Briefing for Thursday, July the 19th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar is holding firm near its 3-week highs it set yesterday. Fed Chair Jerome Powell spoke for a second day before Congress, where he repeated much of the positive views on the US economy that we heard on Tuesday. The US dollar did ease slightly later on, but going into the European session, we're seeing the dollar firming notably against all other majors. The Australian dollar, although it had a very positive start to the day on the back of very strong employment numbers out of Australia, it is now reversed to lower, currently trading around 0.7378. The Canadian dollar, which yesterday reversed sharply higher on signs that there could be progress on NAFTA, it's now also pairing some of those gains, and we can see USD CAD moving higher, breaking above the 1.32 level, and the euro has fallen to 2-week lows. It's coming close to testing the $1.16 level, and the sterling is also down against the US dollar. The pound did fall to 10-month lows yesterday on the back of weaker than expected inflation numbers, and the Chinese yuan is in the news this morning. It's fallen to 1-year lows against the US dollar, mainly on the lack of progress on talks between the US and China. We can see Chinese indices closing lower once again. Other Asian indices were also mostly negative this morning, and we also have a negative start for European indices as well, despite the fact that on Wall Street we had mostly positive close for the major indices. Taking a look now at the major performers, we can see dollar index at the top of the table together with USD CAD, and at the bottom of the table we've got gold and oil. The kiwi is also one of the worst performers this morning. Let's now look at the dollar yen pair. Yesterday we saw dollar yen hitting a 6.5 months high, 113.13, helped by that very upbeat remarks by Fed Chair Jerome Powell, where he was testifying before Congress, the semi-annual testimony, which usually lasts for 2 days. But later on, we did have some soft housing data. In fact, we saw a big drop in housing starts in the US for June. We saw the greenback falling slightly after that, but it's now moving higher this morning, and once again looking very bullish indeed. Let's now turn our attention to the Chinese yuan. We can see the yuan has been falling sharply since June, and although at the start of July we saw some intervention by the People's Bank of China, we saw the yuan firming somewhat against the US dollar, strengthening towards 6.6 per dollar. It's now reversed those gains, and in fact it's hit fresh lows, and the People's Bank of China set its weakest midpoint since August 2017, the first time that the midpoint was about 6.7. So that signals to the markets that the Chinese authorities are willing to let the yuan slide as trade tensions escalate with the US. And so although we're hearing news that the European Commission President Jean-Claude Juncker will be traveling to Washington next week to talk about resolving their differences, mainly on automobile tariffs, and also Trump making positive remarks with regards to negotiations with Mexico, there doesn't seem to be any progress at all with China, so that is weighing heavily on Chinese markets. And finally, let's have a look at sterling, because we can see there that big drop yesterday after UK inflation came in below expectation. We saw headline inflation unchanged at 2.4% instead of rising to 2.6% as expected, and core inflation fell below 2%. So that raises doubts about how many times the Bank of England, if at all, will be raising rates. So even though they will probably be raising rates in August, it is looking like it will be very difficult for them to raise rates once again after that. In addition, of course, we have the strong US dollar weighing on sterling, plus more Brexit uncertainty. And for now, Prime Minister May does appear to be safe, and she managed to win a vote in Parliament over her customs partnership plan with the EU. But we do have the negotiations with the EU and the UK taking place this week, and we haven't really had a proper response by the EU on Prime Minister May's plans. If the UK is forced to make further concessions to the EU, that would put Prime Minister Theresa May's position at risk, mainly because she would most likely see opposition by pro-Brexit Conservative MPs. And finally, looking at today's economic calendar, we do have UK retail sales coming up shortly, and in the US, the main data will be the weekly jobless claims, plus a speech by Fed Governor Randall Quarles. That's it from me. Thank you very much for watching, and have a great day.